All right, we're here for part 5. So part 5 is very important. So keep your ears open and listen, because these are the things you need to know. Okay, before trading, and I'll have the cheat sheet here just so you guys can follow along. Before trading, you must know this. Take your time to research. You got to research the chart analysis, candlesticks, terms, trading words, strategies, lot sizes, etc. You want to practice on a demo account. On Hugo's Way, remember, you want to use that demo account to practice first before using your real account, so you don't waste your money or over leverage your account and end up blowing out your account. And so again, that's going to be Hugo's Way Demo 3 account. If you want to search that in MetaTrader 4, you can use the demo. Easy peasy, no problem. All right, and so this is the key to not wasting your money. And again, just to touch on the chart analysis, you can research this stuff. I'll probably I'll make some videos for it if you guys want as well, just so you can understand how to do proper chart analysis and what candlesticks are. Go ahead and purchase maybe a book on candlesticks or even an ebook on candlesticks so you can see what certain candlesticks mean. And a tip that you guys want to note is to go onto your computer and type tradingview.com. Go ahead and search it up. You'll see the same things you'll see in MetaTrader 4, but on a bigger screen. So if you want to use your computer, go ahead, tradingview.com. It's free too. The trading market holds over $5 trillion a day. Yes, a day. That's not a year, that's not in total, that's a day. So $5 trillion a day is a lot of money. Okay, it's a lot of coin, but it's also a possibility for losses in this industry. So be wary that as much as you can gain money, you can also lose some money too. The market opens at 6 a.m. Sunday AEST time, and it closes 5 p.m. on Friday EST time, so Eastern Standard Time. Take your time, don't rush anything, just go ahead and learn the process, learn the basics, and practice on your demo account, okay? Practice, 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 and then once you're comfortable, go ahead and do some small trades and you'll be good. All right, so this is inevitable. If you're losing money, if you're gaining money, there's no way for you to personally get everything right all the time. So if you are losing money, it's cool. You're also able to gain money. Just make sure you're doing proper risk management and preventing losses or higher losses. If your lot sizes are proper, then you will basically be okay if you lose or if you win. So whenever you're trading, just ask yourself, okay, I am trading to win, say $10. Trading to win $10, but I'm also trading to possibly lose $10. Am I okay with that? Yeah, I'm okay with losing $10, and I'm also okay with gaining $10. So that's how you want to look at trading, because there's never a sure answer. But if you have the right strategy and risk management, who knows, maybe you could be really good at it. We have a lot to cover. So lot sizes, right? What are lot sizes? What are pips? What is leverage and risk management? And we're going to dive a little bit deeper. Lot sizes are used to measure your number of shares, which is money. This is per unit of a currency. And there's 3 different types of lot sizes. There's micro. This will show up in your MetaTrader 4 as 0.01. And no, it's not 1 cent. It's actually 10 cent. But this is how the trading platforms count their money. It's not how we count our money. It's how the market counts the money. So micro is 0.01, which is 10 cent per pip. All right, so if you get in somewhere and your amount goes up 10 pips, then that is $1, right? So that's the first one, micro. That's usually what a lot of people use if they are having maybe $100. And with that, if you maybe have $200, then you could use 0.02. And if you have 300, you can use 0.03. So depending on how much money you have in your account, you want to follow that standard of micro 0.01, which is 10 cents per pip. All right, and then we have mini. Mini is 0.10, which is $1 per pip. So if you go up 10 pips, you made $10. But you can only use this lot size, or not only, but you want to only use this lot size when you have $1,000 in your account. If you don't have $1,000 in your account, you could be risking, there's wins and there's losses. But if you're a really good trader and you know how to get the game right, cool. But sometimes the system won't let you do it if you don't have enough money in your account. So that's also something to note. And again, you don't want to blow your account. You want to use the right leverage. So the next one is a lot standard. That is actually 1.0, which is crazy because it's $10 per pip. So like I told you guys, it's $10 per pip. So if you go up 10 pips, you just made $100. Crazy, right? And in order to use that, you have to have $100,000 in your account. It's crazy. It's really crazy. So if you have $1,000, please don't be trying to use 1.0 lot size. That's $10 per pip. If you end up losing $100 out of your account, that's on you. But I told you what's the way to go. Okay, wait till you get to the 100,000. Okay, I'm trying to wait till I get to the 100,000. Okay, but if you are a good trader and you know that you're very good at the charts and you're willing to lose that $100 or whatever many amount of dollars that you have calculated, that you have predicted, that you have used proper risk management for, go ahead, do your thing, make your coin. I'm happy for you. I want to use the 1.0 lot size too, so I'm happy for you. But be smart about it and try to use it when you have that amount of money in your account. All right, and so next we have pips. Pips are just unit of measure. So like I said, 10 pips could be however much money compared to the lot size. All right, and we have leverage. Leverage is how much money is used. And risk management means not over leveraging your lot sizes, which depends on your account size. Using proper chart analysis helps. And there are 3 types of market analysis. The first one is a technical analysis. This is the most common one, where you use support, resistance, or trend lines. These lines help you see common trends in the market. So if you go to a chart and you see that it's most likely a downtrending market, you're gonna use your resistance lines. You're gonna use your support lines and your trend lines. Say, okay, this is going down, and I see right here we have some support, which may mean that you see a straight number of candles kind of just lining up there. Maybe that's a good support for you. I'll get into a video on that more so, but just to give you guys an idea, support lines is where you might see some support there. Literally, you might see like, okay, it's pretty steady there. And so our next market analysis is a fundamental analysis. And a lot of people like to use this one when they're watching the news or something like that, because this is based off of economic news and global situations. You're into watching the news, or if you're into global stuff, you can see, okay, oil is going up or oil is going down. Cool, I'm gonna go ahead and start to trade some of these oils or exotics and just get more money because I like the economy and I like to be into the news. Great, go ahead and do that. But it's also good to mix these up a bit. Okay, that's just my tip. If you want to do one or the other, that's cool. I mostly just do the technical analysis, but it's really good to think about what the economy is doing so you can know heads up why the market is doing what it's doing. All right, and our third analysis is a sentimental analysis. And that simply could be you seeing that a chart is downtrending. You're more of a sell trader. You like to sell. Maybe you always use your sell stops and your sell limits because you you think it's cool. You're like, okay, like this is working out. I prefer to be using my sells instead of buys. Cool. If you like to do that, no problem. But some traders might say, I only like this chart, so I only trade that chart. Cool. You can do that if you want. It'll be beneficial in any way because you're always looking at that chart. You see it 24/7. You know what it's done in the past, specifically because you've been trading it for a while. So it's a good tip. Again, I would tell you guys to kind of study all of this and just see how it works for you. All right, so now we're gonna get into buy versus sell. This is where you guys need to pay attention, okay? Because it's a bit confusing, and I was a bit confused at first too. So this is buy versus sell. Just so you guys know, buy means it's going up, sell means it's going down. And a downtrending chart is a bearish chart, and an uptrending chart is a bullish chart. And we're gonna get into the different positions when trading. So when you're trading, you're gonna be in your MetaTrader 4 app, and you're gonna press trade on one of your pairs, and you're gonna see that you have to pick a different position. It has a list of market execution. We have sell limit, we have buy limit, we have buy stop, and we have sell stop. All right, so market execution is buy, sell, or set up immediately. That means when you're doing a market execution, you're jumping into that trade immediately, instantly. You're in it to win it or lose it. And so next is sell limit. Sell limit is future price placed above price line going down. And buy limit is future price placed below price line going up. And a buy stop is future price placed above price and going up. Sell stop is future price placed below price and going down. But the difference is basically how I see it is the buy stop and sell stop, they stick to what they're known as. You know, buy is up, sell is down. But the opposites happen with sell limit and buy limit. It's a little different. So if you see a buy limit, price placed below the price line and going up. So if you see it's going up, that's when you're gonna do a buy limit. If that makes sense, yeah. All right, so we just finished our part 5, and that was a lot of information. This is stuff you guys really need to know, so don't hesitate to look at the cheat sheet. It's really good that you guys get into this and that you start today, because it's above $5 trillion a day in this market. Like I said, there's losses and wins, but with proper risk management and proper practice and just believing in yourself, you can do anything. Okay, so it's not rocket science. It's not super easy either at first, but once you get this, literally this cheat sheet will let you know everything you need to know. Like, you don't need to do nothing but look at this cheat sheet, okay? It's gonna teach you all you need to know. You're gonna be so happy. You're gonna be winning money. Hopefully not losing too much money, but it's okay. Like I said, losses will come. So don't be discouraged if you are losing. That's why you start low, okay? Once you build up your account more, then you can start, you know, spend a little bit more money. You know, get a little bit more leverage in it, and then you could possibly be making more money. You get me? So I'm so happy that you guys got through part 5. I know this was a lot of information. This is my favorite part though, because you guys get to know the nitty-gritty of trading. We got into the buy stops, we got into the risk management, leveraging, pips, all that good technical stuff. So we're not done with the technical stuff just yet, but you guys are gonna keep on watching in part 6, and we're gonna get this started even further and eventually trading. So thank you guys so much. If you didn't already, go ahead and like, comment, and subscribe, and have a wonderful rest of your day. Bye. you.